Hi, my name's Tanya Reid from the Bantax Mackay office in Queensland. I'll be discussing today the immediate asset write-off and the 50% asset write-off that's come a part of the government's new stimulus package as a result of COVID-19. I will be reading from a script because there is quite a bit of information involved, and I want to ensure that we're not missing anything that we need to cover. There are some slight differences depending whether your turnover is under 10 million or under 500 million. The basic concession is to allow small to medium businesses to immediately write off purchases of equipment costing less than $150,000, as long as it is installed and ready for use by 30th of June 2020. Like items do not have to be added together to be tested against the $150,000 threshold, so you could effectively buy $10,000, $20,000 vending machines. The equipment can be new or second-hand and is also available for improvements to existing assets. It is important to note that the immediate asset write-off threshold reduces to $1,000 from the 1st of July 2020, and then is only available for businesses with turnover of under 10 million. So that installed ready for use deadline is crucial. Asset purchases that definitely do not qualify are horticultural plants and building construction. If you're financing the purchase, do not use a lease. It must be a loan so that you actually own the asset. For all the fine print, refer to our blog on immediate asset write-off, which is based on the original legislation with the figures and dates updated. It will be provided at the end of this session. Most importantly, you need to speak with your accountant before you rush out and spend a lot of money when we are talking about such big sums. An immediate deduction might end up being more than your taxable income for the year, wasting your tax-free threshold and lower tax brackets. The net result could be better if the asset cost was actually depreciated over several years. But if you install it ready for use between 12th of March and 30th of June 2020, you will have no choice but to claim it. Now, here is the fine print depending on the size of your business last financial year. For turnovers under 10 million, which would apply to most of our client base, you're already allowed this write-off for anything you bought this year that cost less than $30,000, providing, of course, it is installed ready for use by the 30th of June 2020. This threshold is increased to $150,000 if the equipment is installed ready for use between 12th of March and 30th of June 2020, even if you ordered it or paid for it earlier. That's right, there might be a few factory owners thanking their electricians for being tardy. You could have even ordered the equipment as far back as 12th of May 2015. This concession extends to allowing small business pools under $150,000 at 1st of July 2019 to be written off. This is a trap for small businesses that do not have huge profits this year. The write-off of their pools is compulsory, so all small businesses will lose their pool balance if it is under $150,000. The formula is start with the balance as at 30th of June 2019, add business share of new assets. This is probably zero as it would have already been immediately written off, so bypass the pool. Subtract the business share of the proceeds of any pool assets sold during the year. Note this balance is calculated before applying depreciation for the 2019-2020 year. If the asset is purchased by a holding entity that just leases back to its trading entity, it will not qualify for the concessions because it is not in business. Okay, the next threshold is turnover over 10 million but under 500 million. You are only entitled to the $150,000 immediate write-off if you actually ordered or acquired the equipment after 2nd of April 2019, but it was installed ready for use between 12th of March 2020 and 30th of June 2020. If the asset is purchased by a holding entity that just leases back to its trading entity, it appears because of the sheer size of the turnover that would be considered to be in business so it can access the concession. Further, if the entity has turnover of more than $10 million, these concessions can apply to plant and equipment in a commercial building that is passively rented out. It's an interesting point. The next topic I will be discussing is the 50% asset write-off. But wait, there is more. And this goes through to 30th of June 2021. First used or installed ready for use. It only applies to brand new plant and equipment, not buildings. This applies to businesses with a turnover of under 500 million. The exclusions are buildings, horticultural plants, water facilities, fencing, and fodder storage costs for primary production. Also excluded are items your employee salary sacrifices. You must not have committed to the purchase of the asset before 12th of March 2020, and it will not help to cancel a contract and reorder. This is something that is called out. This is probably only of interest to businesses after 30th of June 2020, otherwise they would be using the immediate asset write-off. That is, unless they intend buying equipment worth more than $150,000, then the 50% write-off is the only option available. The measure provides an immediate deduction for 50% of the purchase price and installation cost. Then the remaining 50% is written off in accordance with normal depreciation rates. This depreciation starts in the year of purchase, so you get the 50% deduction plus some depreciation. If the asset is placed in a small business pool, then the write-off and depreciation for the year will total 57.5%. Now, I understand there's a lot to take in, so please ensure that you do discuss any of these issues with your accountant.